Right, and we're live.
And we're live. Welcome everybody to episode number 3 of Fluid and Finance with Mercury-Square. I'm your host, Ali Manviwala, co-founder of Mercury-Square. I have my co-host with me, my business partner, Mark Muniz, and let's get along with it. I hope everyone enjoyed episode 1 and episode 2. Um, we're just trying to break down our journey of building this hedge fund and trading. And I hope you guys are enjoying the first 2 episodes. As we go along, we're just trying to get better with, trying to present this information to you guys. So let's get to it. Before we move further, we got to go through the disclaimer. Um, this presentation is for educational purposes only. We are not recommending any stocks to buy or sell. All investing has substantial risk of large losses. So be very careful when you are investing in the stock market. Definitely do all of your research and try to, make sure you have rules in place and proper risk management before you get into any position. So let's move to the next slide. Who are we? We are a boutique investment firm. We're currently, Mark is out of New Orleans. A little bit about us. I don't know if I don't think we went over where we're from. Mark's actually out in New Orleans. I'm here in Phoenix. Due to COVID, we've been pretty virtual, and I think we're doing a good job, kind of running this fund. We have times we meet every day, just like everyone else in the world, and I think we're doing great. So a little bit about us, that's where we're kind of co-located right now, but eventually the plan is we'll both be in the same location. So what model do we follow? As we've kind of gone over in episode 1 and episodes 2, we follow the CAN-SLIM trading methodology by William J. O'Neill and by investors.com. If you want to know more about, CAN-SLIM, feel free to check out episode 1 and 2. We kind of go over it at a really high level, but I do recommend anyone that wants to learn more about CAN-SLIM and how to invest, with the CAN-SLIM method. There's lots of great resources, and I believe in episode 2 we talked about giving you guys more information about some great resources you guys can use, but I forgot to put that slide in here, so hopefully next episode we'll have that information for you guys. So let's kind of get into it with our current holdings. So last week we talked about what we currently hold, what we're currently holding, and how the week played out. So if you guys tuned in to episode number 2, our biggest holding at the time was Old Dominion, and we had actually at that time gotten into Macy's. It was a mid-sized position for us. Right now, it's actually one of our largest positions, and it's been doing great. So let's get into it. Let's look at our positions and go from there. So, all right. So actually, first thing I want to do, before we get in, before we actually go into the position, right? Something that Mark and I actually look into is, and something that CAN-SLIM always talks about is market direction, right? It's basically the last letter in CAN-SLIM, and it's very important to know where the market is currently today, right? Are we in a bull market? Are we in a bear market, right? So first thing I always look at is the market snapshot. So Tuesday's action, Nasdaq paces gains, confirmed uptrend. So the market is in a confirmed uptrend, and distribution days, right? 1 on the Nasdaq, 2 on the S&P 500. So the market looks very good. And before we actually get into the name, I want to definitely look at the major indexes, because that is a great telltale sign of how the market is doing as a whole. So let's start with the Nasdaq. The Nasdaq looks great. I mean, on the daily, it's trending above the 200, trending above the 50-day moving average. so far this year, we've had some of these like little smaller dips, but overall, you know, market direction is solid.
Pretty strong
Now,
uptrend.
it's not, yeah, we're in a confirmed uptrend. Now, the market, now a lot of people will say that, a lot of your bigger names or your growth stocks that were doing really well pre-COVID are not doing very well right now. The money is kind of moving all over the place. That's what Mark and I have noticed. So there are certain names within each industry groups that are outperforming. So it's very important that you look at the current name and what it's doing. We are seeing some of the money come back into growth stocks from what we have been noticing, as we talked about in episode 2. A lot of your computer software industry groups are starting to kind of go above the ranks, and kind of go up. So we are seeing that, and we'll kind of look at our positions and kind of how we've decided what to kind of be into. So the next composite I look at is the S&P, trading, very, I mean, and there were some times during COVID where the Nasdaq and the S&P were not trading alike. Most of the times they should be very alike. So if you look at it here, S&P looks similar to the Nasdaq. The Dow also looks great. I mean, it's kind of trending on the 10 over here. Overall, um, it is in a confirmed uptrend. I don't really like how the arc line here looks on the Dow, but overall, I think the Dow is probably lagging the most out of the 3 index, but the S&P and the Nasdaq look good. Also, something that we like to look at, and this was actually, Mark and I looked at this last week, and it was a little different. Was the Russell? So the Russell, it's been kind of consolidating last year. It's just been doing nothing for the last 1 year, and it kind of broke out of this long flat base, 33-week flat base, and it's within the pivot point, and you're seeing some names within the Russell that are doing very well, and we actually got into some of the leading stocks within the Russell index, and we'll kind of go over those once we go through our portfolio. So let's go back to our current holdings. Let's look at right now our biggest position, which is Macy's, and how it's doing.
Yeah, so Macy's, it's one of the leaders in retail, like we mentioned in episode 2. By the way, I know we've mentioned a lot about episode 1 and 2. Episode 2 was seriously great. You got to go check it out. All right, if you haven't, I would recommend pausing this video, going to watch that one, and coming back to this one. So in that video, I think like Ollie mentioned, our portfolio has changed quite a bit, right? And that was at the time, in that video at the time, Macy's was one of our smaller holdings. So it's interesting to see how in only about a week and a half, 2 weeks, Macy's has all of a sudden risen through the ranks and is now our number 1 holding. That's because, like we predicted, retail has done incredibly well. I mean, Macy's looks good. It's firing on all cylinders, accumulation distribution, up-down volume ratio. Fund growth is there. Earnings is beautiful. Sales is beautiful. It's getting good volume. RS is strong. The chart's strong. It's getting good price action. So everything is there across the board.
Right. And if you look at the index, number 4 right now, retail department stores is number 1. So it's rising above the ranks. It's the number 1 industry group right now. And let's look at it on the daily. I mean, just overall, just a great name. On the weekly, it looks awesome. The fundamentals are very strong. Accumulation distribution rating is an A, which is great. Over the last 2 quarters, great sales, right? Really growing number of sales, and I think as we talked about earlier in episode 1 and 2, this industry group got battered right after COVID. And it took a big hit for the last, and it had been even pre-COVID, right? A lot of people were into online shopping, and just the retail industry was just getting beaten harder, and it went below the 200 moving average in December of 2018, and it didn't really go above the 200-day moving average till close to this year. So you're looking at about March, April timeframe. That's when retail starting to really come back up, and it's really risen above the ranks, and a lot of money is going here, and it's just people are just tired of that you can kind of just see if you've been to a mall recently or have been out. I have been noticing that the malls have been crazy packed, I believe, everywhere in America. And Dillard's, which was another name in this industry group that's done well, and we kind of didn't get in Dillard's on time, but we like Macy's, and it's been doing really well. And we're just letting the market tell us what to do next, right? We are not predicting anything, and the market is telling us that Macy's is hot, and you can see it right here. So right now it's our number one position, and we'll see where it's at next week. So let's go to our second biggest position. This was a position that we were in the last 2 weeks, and we have slowly added to it because fundamentally and technically it looks great, and we like this name, so we did add on to it, and we definitely see it hitting our profit target. So that's Intuit. Again, on the weekly it looks great. Really kind of pulled out of this little pivot point really strong. On the daily, it's doing great. Today was a great day. We do have earnings coming up in the next 2 days, so that'll be kind of something to watch here. I'm hoping that Intuit's most likely going to have great earnings, but I'm hoping that we still get that gap up on earnings, and they beat earnings expectations. And if not, I still feel like this still has room to run, but that's something we'll have to see as we kind of get through earnings. So we don't want to sell out of it before earnings. We like the name. So as we talked about in episodes 1 and 2, if you really like a name, and you have a good cushion on it. So we do have a good cushion on into it. You can try to weather the storm. So you could hold it through earnings. If your cushion isn't that great, maybe you don't want to. So that's all personal preference. You have to really know if you like the name fundamentally and technically. So every trader that kind of is going through earnings season, something that you have to kind of so that's Intuit for you guys. Let's go to our next position, Old Dominion. So let me pull this one up.
Dominion. So this has been one of our big winners. If you guys watch episode 2, which, like I said, you should, it was our biggest holding, right? It was pretty much like the crown jewel of our portfolio, right? We've had winners outpace it since then. We've added to it. So Old Dominion has still chugged along. We're up close to 20% on it. So we are going to hit our profit target real soon. And we might even look for a re-entry on it. And just real quick, Old Dominion across the board, it looks good. It's a really good name, part of a great industry group. So yeah, that's Old Dominion.
Yeah, and this one chugging along, it's doing great. So let's move to our next position. Let's look at Fang.
So we're kind of in a rocky place with the oil names right now. Fang and our other holding EOG. We're kind of in a rocky place. So oil is still up, right? Fundamentally, oil's investment thesis is still there, right? But there could be better places for the money. So that's what we've been discussing recently. and because Fang and EOG, they're kind of stuck, you know. We do believe oil will continue to go up later on in time. We think right now may not be that time. Maybe in the upcoming weeks there might be some better names to be in, but Fang still looks strong, so that's why we're kind of because it looks strong in the weekly. On the daily, it looks good, but we're kind of just looking at other names. And I mean, there could be a possibility for better gains somewhere else, but I mean, everything on Fang looks good.
Right, and fundamentally and technically, Fang looks great. Mark and I have been talking about maybe repositioning into something else that's a little bit stronger. But for now, I think we still like oil and gas, and we'll kind of watch it. If it's consolidating sideways, maybe we'll try to put some money somewhere else. But so far, it looks great. So let's look at our next position, Aries, and we added on to Aries last week, and Aries looks great fundamentally and technically. It meets every criteria. Strong earnings per share, great sales. Overall trend looks great, right? It's trending above. Let's look at it on the daily. It's trending above the 10. It's coming off of the pivot real strong. It looks great, and we're just kind of waiting for it to really make that run up. So we just added more onto it, and it's a bigger part of our portfolio now, and hopefully this industry group it's rising above the ranks, and eventually we're hoping to hit our profit target, but something to watch and see how it'll do next week. So let's move to the position after that, IIPR. This was in our portfolio last week. This is our REIT, and REITs in general have been doing great. On the weekly, this has just been performing great off of the pivot. Looks really strong. Yeah, it's killing it. I mean, there's nothing else to say. We kind of went in depth on IIPR in episode 1 and 2, so feel free to check that out. But so far so good. It's a great name, and we're hoping to definitely make some money on this. So back in oil and gas, sorry about that. EOG, few weeks ago in episode 1, EOG was a bigger position. We did shift some money around, so it's a little smaller part of our portfolio. But as we talked about, oil and gas, overall, it looks great. On the weekly, it's trending above the 10. Above the 50. On the daily, it's kind of consolidating on the sideways pattern here. We're kind of now trying to see if the buyers really come in. Oil and gas still looks great. It's just we're looking to see if we kind of really need this to run and hit its profit target.
I think honestly EOG might be on the chopping block. Do you agree with that, Ali?
Yeah, I do.
Yeah.
So I like Fang more than EOG. And it's on the chopping block for us because we are seeing a few other names. Mark and I, every day we spend a lot of time looking at multiple charts and building our watch list, right? Every good trader will tell you, do your research, build your watch list. And we always have a strong watch list in place. We don't really talk about our watch list here. We just talk about the positions that we're in.
Yeah.
But there are a few other watch list items watch list stocks that we really like.
That look good. Yeah.
That look good. Yeah. And we might just move some money around. So something that and this is something that we could cut. So
if you guys, by the way, if you guys would like to see a watch list video, drop that in the comments. Let us know, and we'll make it for you. Just super high level. So yeah, just let us know.
Right. So let's go to our next position. This is a new position that we just added to, and Mark, I'll let you kind of talk about this one.
Carbon. So so basically, this is an ETF that measures hydrocarbon activity. So one of the biggest reasons why we bought it is because when you listen to all these big minds think, like all these really big asset managers that manage in the trillions, that manage a ton of middle class pension funds, and if you listen to some of the sheiks from the Middle East, high level people in China, even the big time bankers in Europe, they keep talking about hydrocarbons, and all the governments across the world want to push us towards the use of renewable energy away from fossil fuels. So what that creates basically is a scenario where hydrocarbons become more scarce. And when you couple that with an inflationary environment, then the price of hydrocarbons basically skyrockets, right? So think about it. Think about it basically. So if the supply for hydrocarbons is going down because governments are trying to push us to use renewables, when the demand is still high, everybody. I mean, EVs are not a big thing. Everybody uses gasoline for their cars. The most think about gasoline generators and all this. So hydrocarbons are still there. That's the investment thesis for this ETF. And if you look at it, it's trading like water.
Yeah.
It looks really good. It's getting good volume. It's I mean the daily. I mean just look at the daily chart. It came off the flat base, really strong. It's trending along the 10. It's above the 10 and the 50, and it's going. So yeah.
Yeah, this one looks beautiful, and this is one of the names that's in the Russell IWM. I showed you guys that earlier. The Russell has been consolidating over the last year, and it kind of just broke out. It's in the pivot, and this is an industry group that we really liked, and something that Mark's been talking about for the last few weeks. So once we saw this name, and we kind of saw it in our buy point, something that we decided to kind of get into, and as we talked about, this is one of the big names in our watch list that was doing great, and so far it's doing really well for us. And we could potentially add to this, we don't know, but so far it's about 5% of our portfolio, and it's trending really well. So let's move to our next position. TradeWeb.
So this is our newest addition. Here, I'll let you talk about this one.
Yeah, so TradeWeb, this is our newest addition. They basically build and operate the OTC marketplace within the United States and internationally, and they have been killing it. If you guys have been kind of hearing the news, this company has been all over the place. So we saw this one really coming out of this stage 2 cup, performing really well. Fundamentally, everything looks really good. The up-down volume ratio is at 1.9. Accumulation distribution rating is at A+, which is really, the institutions are really buying this name, and overall, this thing just looks great. Look at the sales. You're seeing sales growing. The number of funds are increasing quarter after quarter. Strong earnings per share, strong accumulation distribution, strong composite rating. Overall, this name looks great.
Yeah. So TradeWeb, I think TradeWeb is positioned strategically.
Let's look at it on the daily too.
Yeah. Yeah,
and on the daily, it's just moving beautifully. Yeah, it came off of this cup, trending above the 10, just looks great. So
that looks beautiful. Oh my gosh.
TradeWeb, but we really like it, and we think that this thing could really run. So, and it meets the 100% of the checklist criteria. It just looks great. So something that we really like. Let's move to our next position. And TradeWeb, it is one of our biggest positions. TradeWeb is bigger than Carbon, and I think I forgot to move that down, but
that's all right. So next is Riot.
Right. Yeah. So we were talking about this earlier, Mark. And
I think this one might also be on the chopping block with EOG. They might get their heads chopped off. So the thing about Riot, right, is originally it was meant to be an asymmetrical bet. It still is. right? So it's basically like it's a blockchain. It's like, think of it like a cryptocurrency equity play, right? Offering crypto exposure, but through a stock. I mean, what more could you want? So I mean,
Yeah.
this one has tremendous upside, and it's only like it's less than 3% of our total portfolio. So it's tremendous upside with very little downside. So I think you hopefully you get to see why that can be beneficial, but it's currently down. It's under our buy point. I was kind of we got in a little bit high, top of the buy. So this one might be getting cut. I think Bitcoin just dropped under 60,000, and it was like a key psychological level. So I mean, we'll have to see what happens. Maybe in the next episode we're not going to be holding Riot, or possibly Riot's can be way up, because it's one of those volatile ones. So yeah.
Right. And, usually we cut, most of our positions within the 5 to 8% sell rule. But with Riot, since the volatility is so high, and it is a small position, it's only about 2 to 3% of our portfolio. We just kind of wanted to see how this would do. So we might cut it, and then we might get back into it. This one pretty much correlates with the crypto markets, and specifically with Bitcoin. And as we've seen, Bitcoin is now at 59,000 as of today. So Bitcoin has really taken a beating over the last few days. So we're kind of seeing that same correlation with Riot. So could be time that the crypto markets are consolidating, and we'll definitely get back into it once we see Bitcoin, Ethereum above its resistance levels, and then we might look at getting back into Riot. But for now, it could be a cut by the next episode. So all right, let's look at our next position, VRS. This is an open position that we have. It hasn't been filled yet. We're looking at a kind of an entry above the pivot. This was another one that we really liked. This is currently, a company that trades within, the Russell Index.
Yeah.
And this looks great. Fundamentally and technically, it looks great. I mean, we're kind of just waiting for this one to get filled. But we'll kind of see how this one kind of plays out as the week goes along and into next week.
So this is another one of those small cap names with the Russell breaking out that could do really, really, really well. So it's definitely one to watch, and fingers crossed we get filled, because it looks tremendous.
Right.
Yeah.
And this thing could run. Yeah. I mean, the last 2 quarters, the sales have been going crazy. It's got a very strong up-down volume ratio. That means it trades very well. Accumulation distribution rating is at an A+, so that means the big funds are getting into this. So, I think it's consolidating a little bit. It still looks good. We're just kind of waiting to get filled on this one. So we do want to get in, at the higher side. We're kind of past the pivot on this one, but we just want to make sure that this one doesn't fake us out. So that's why we're getting in on the higher side here. But that's so our next position. This is actually one of our derivative positions. It's a call debit spread on Google, and as you guys probably saw in episode 2, we were looking into actually increasing our position in Google, but this is something that we talked about last week, Mark and I, and we closed our position in Google. We didn't take a loss just because, we're actually up on Google.
Yeah.
But only because we don't really see Google moving as quickly as it has in the past.
Yeah, correctly.
And we just try to take a different approach on it, because we didn't want to tie up a huge chunk of our money in Google. We just thought that there were better names that are just moving better and quicker. So we took a derivative play here, and I'll let kind of Mark talk about it at a high level, and we'll kind of go from there.
Yeah, so this is another one of those asymmetrical bets where basically, can you go to the PowerPoint slide real quick, just for visual purposes. So as a percent of our portfolio, it's a third of a percent. This derivative, and basically it's a very little cash outlay for incredible upside. So if you look at the risk, it's 1 to 14.6 times roughly. It's closer to 15. So that's a trade you got to take. That's a trade that you should be happy with, because I mean, and it's Google too. We have a month of time on it currently, so we'll have to see what plays out. And even if Google doesn't really reach that strike price that we're looking for, then we can just roll out of it and tackle another month of time. So there's a lot you can do with derivatives, but more than stocks. But derivatives have way more risk. So always be sure to study what you're getting involved with.
Correct. And this was a derivatives play that that looked good for us. It has great upside and small downside, and that's something we look into when we're looking into a derivative play, especially in a position that we really like.
Yep.
So this was something that we found a good good call debit spread on, and we didn't have to have a huge chunk of our money invested in this stock. We can still make a good chunk of money with a good derivatives position. So it's more of a technical play, but something that we do as part of our fund.
Right. So I think the overarching idea behind this play basically was to take the cash that we had in Google, which eventually, if all our bids would have gotten filled, it would have been our biggest holding. The idea was to take the cash from Google and to maybe just move it around a little bit. So that's where you got the Verso buy, you got Carbon and TradeWeb, who all three look tremendous. They all three look good. They look like they're going to do well. And we're still keeping the upside from Google. So that's just a way of getting your hand in multiple cookie jars at the same time, essentially, because we still have our upside from Google, and now we have exposure to small caps like we wanted.
Correct. And it just kind of lets us, lets our money kind of be in positions that move a little bit faster. Google is something that it's already made its run up, so it's not going to move as quickly as it would have probably a few years ago.
Yep.
So this is something that you could take that derivatives play, not risk a huge chunk of portfolio and put in some of the newer movement quick. So that's what we did here. Now let's move to the two positions that we cut. This is something that we talked about last week. So not going to go over the charts here, but we basically cut our position in MGM and Mosaic. We just thought that there was money that could be better used elsewhere. And we had better stocks in our watch list. And as you guys can see, we have some new positions this week, and that's all we did. We just kind of moved some money around into position and can move a lot quicker. So we got out of MGM and Mosaic, and I think they were just kind of trending downwards too, and a little bit more volatility than we like.
This is like we always talk about risk management. Risk management is important. I think MGM, once we exited, we either were just barely positive or break even, but we wanted to put that cash elsewhere. With Mosaic, we were a little bit down, but the importance of risk management, right? So
yeah. Yep, I think that was about it. That's all we had for this week. Something that Mark and I were talking about, we might have some guest speakers in some of our future episodes. So to kind of go over different things and maybe break down some of our stocks. So stay tuned for that. Something that might be coming in the future. So just kind of kind of giving you guys a heads up there. So I think that's all we had, and I think we're ready to sign out. So hope you guys enjoyed the video. Do give us a like, subscribe, and we'll see you guys later on this week.
Yep, Mercury-Square signing out.